Imagine waking up one day and realizing you've built a life where financial stress no longer exists. You don't worry about bills, emergencies, or what your bank account looks like. You have security, freedom, and options. In the Algebra of Wealth, Scott Galloway breaks down the simple yet powerful formula to achieve financial security and freedom. In this video, we're diving deep into the 4 key pillars that can take you from financial uncertainty to long-term wealth. In the Algebra of Wealth, Scott Galloway outlines a clear and practical roadmap to financial security. The book is divided into 4 key pillars that, when followed, lead to wealth accumulation and long-term financial stability. Each pillar addresses a different aspect of wealth building, offering valuable insights and actionable advice. Pillar 1. Focus on your earning power. The first pillar emphasizes the importance of maximizing your earning potential, particularly in your working years. Whether you're just starting out or already in a career, increasing your income is foundational to wealth building. Galloway stresses that while saving and investing are important, they pale in comparison to the importance of earning more money. Many people get stuck in jobs that offer little opportunity for income growth. This stagnation can be a major roadblock to achieving financial security, as inflation erodes the value of money and expenses rise over time. People often find themselves living paycheck to paycheck, with little room for saving or investing. Galloway advises prioritizing education and self-improvement. The more valuable your skills are, the more you can demand in the marketplace. Continuous learning, gaining expertise, and acquiring new skills can significantly boost your earning potential over time. Actionable step. Take online courses, attend workshops, and actively seek mentorship in your field. Whether you're in tech, finance, marketing, or any other profession, staying at the cutting edge of your industry will allow you to demand a higher salary or move up the ladder. Certain fields, like technology, healthcare, and finance, tend to offer higher earning potential due to demand. Galloway recommends pursuing careers in industries that are growing and that pay well. If you're in a stagnating industry, consider pivoting to a more lucrative one. Research high-growth fields and consider what skills or certifications you'll need to make the switch. Networking can open up opportunities for career advancement, partnerships, or new roles. The larger your network, the more chances you have to grow your income. Attend industry events, engage on LinkedIn, and reach out to professionals in your field. Regularly expand your network, as relationships often lead to career growth. If you're looking to increase your income without changing jobs, consider starting a side hustle. This could be anything from freelance writing to consulting, or even starting an online business. Identify a skill or interest you have that could be monetized. Create a plan to start small and build your side income over time. Many people find that their side hustle eventually becomes their primary source of income. The path to financial security starts with increasing your earning power. By investing in yourself, choosing a lucrative field, networking effectively, and potentially starting a side hustle, you can significantly increase your income, setting a strong foundation for building wealth. Pillar 2. Save smart. Once you've maximized your earning potential, the next step is saving effectively. According to Galloway, saving is not about depriving yourself, but about living below your means and making intentional choices with your money. The goal is to create a buffer for unexpected expenses and future investments. A common problem people face is overspending and not being able to save enough. With the constant temptation of consumer goods, social media influence, and lifestyle inflation, saving money can feel like an uphill battle. People may struggle to build an emergency fund, let alone save for long-term goals. Pay yourself first. Galloway advises automating your savings by setting aside a percentage of your income as soon as you get paid. This way, you're ensuring that your savings come first, not your discretionary spending. Set up automatic transfers to your savings account as soon as your paycheck comes in. Aim to save at least 15 to 20% of your income, adjusting as your financial situation changes. It's tempting to increase your lifestyle as your income grows, but doing so can undermine your savings efforts. Instead, try to maintain a modest lifestyle and save or invest the difference. Track your spending and identify areas where you can cut back. This might involve small changes, like reducing dining out, or bigger lifestyle choices, like driving an older car or living in a less expensive home. A key part of financial security is being prepared for the unexpected. Galloway stresses the importance of having 3 to 6 months' worth of living expenses saved in an emergency fund. This provides a safety net for job loss, health issues, or unexpected expenses. Start by saving a small amount each month until you build up your emergency fund. Keep this money in a separate account to avoid spending it on non-emergencies. Debt can be a major obstacle to saving. Galloway advises avoiding high-interest debt like credit cards and being mindful about taking on loans. If you have debt, prioritize paying it off to free up more money for savings and investments. Create a debt repayment plan. Start by paying off the debt with the highest interest rate first while making minimum payments on others. Once that's paid off, move on to the next one. Pillar 3. Invest wisely. The third pillar is about making your money work for you. While earning and saving are crucial, Galloway emphasizes that real wealth is built through investing. He encourages people to put their money in assets that appreciate over time, such as stocks, bonds, real estate, or even a business. A lot of people hesitate to invest because they either don't know where to start or are afraid of losing money. This can lead to missed opportunities for wealth accumulation. With inflation eroding the value of savings over time, simply saving is not enough to achieve long-term financial security. Start early and let compounding work for you. One of the most important principles in investing is compound interest. The earlier you start investing, the more time your money has to grow. Galloway advises starting as soon as possible, even if it's with a small amount. Open an investment account and start contributing regularly. Even if it's a small amount, the power of compounding can lead to significant growth over time. Galloway warns against putting all your eggs in one basket. Diversifying your investments across different asset classes, such as stocks, real estate, helps spread risk and increase potential returns. Invest in a mix of assets based on your risk tolerance. You might choose to invest in index funds, individual stocks, bonds, or real estate, depending on your financial goals and time horizon. Invest for the long term. Galloway emphasizes that successful investing is not about timing the market, but about time in the market. He encourages a long-term approach where you hold on to investments and let them grow over years, rather than trying to make quick gains. Choose investments with long-term potential and avoid reacting to short-term market fluctuations. Stay focused on your financial goals and trust the process. Every investor has a different risk tolerance based on their financial situation, age, and goals. Galloway encourages people to assess how much risk they're comfortable with and invest accordingly. Evaluate your financial situation and decide how much risk you're willing to take. If you're younger, you may be able to afford more risk and potentially higher returns by investing in stocks. If you're closer to retirement, you might prefer more conservative investments like bonds. Investing wisely is the key to building wealth over the long term. By starting early, diversifying your portfolio, investing for the long term, and understanding your risk tolerance, you can create a strategy that maximizes growth and financial security. Pillar 4. Be adaptive. The fourth pillar is about adaptability. While the first three pillars focus on earning, saving, and investing, this pillar emphasizes the importance of being able to change and adapt to new circumstances. Whether it's a shift in the economy, a career change, or a personal life event, adaptability is key to maintaining financial security and long-term wealth. Many people get stuck in a certain mindset or routine, especially when it comes to money, jobs, and life plans. They might fear change or be unwilling to adapt, which can lead to missed opportunities or financial setbacks. In today's fast-paced world, industries change, technology evolves, and personal situations can shift, making adaptability a crucial skill. The book stresses the importance of continuing to learn and evolve. The world changes rapidly, and those who can adapt their skills and knowledge will stay ahead. Whether it's learning new job skills, financial strategies, or investing in personal development, lifelong learning keeps you relevant and prepared for new opportunities. Dedicate time each week to learning something new, whether it's through books, courses, or mentorship. This could include improving your financial literacy, developing a new skill for your career, or exploring new investment strategies. Life doesn't always go as planned, and sometimes you have to pivot your approach. Whether it's changing jobs, moving to a new city, or shifting your investment strategy, being willing to change course when necessary is crucial for staying resilient. Take stock of your life, career, and financial situation regularly. If something isn't working, be willing to make a change. Whether it's leaving a job that's no longer fulfilling or adjusting your financial goals, flexibility will serve you well. Diversify income streams. Having multiple sources of income can be a lifesaver during times of economic downturn or unexpected life changes. If one stream of income dries up, you won't be left in financial jeopardy. Galloway advocates for finding ways to diversify your income, whether through side businesses, investments, or passive income streams. This could include starting a side business, investing in real estate, or building a portfolio that generates passive income. By not relying on a single income source, you protect yourself from unexpected job loss or economic changes. Be open to reinventing yourself. Galloway emphasizes that your career and financial success may require reinventing yourself multiple times throughout your life. This means staying open to new opportunities and embracing change, even if it feels uncomfortable at first. If you've hit a plateau or feel like you're no longer growing, consider what reinvention might look like for you. This could involve learning a new skill, changing industries, or pursuing a passion project that could lead to new opportunities. Anticipate market and industry changes. In both career and investment strategies, it's important to keep an eye on future trends and shifts. Being able to spot upcoming changes in your industry or the market allows you to position yourself for future success rather than being caught off guard by disruption. Stay informed about the latest trends in your industry, technology, and the economy. Read relevant news, attend conferences, and engage with thought leaders. By staying ahead of trends, you can pivot your career or investments before disruption hits. Being adaptive also means staying financially flexible. Galloway advises against locking yourself into rigid financial commitments that could limit your options later. For example, taking on too much debt can make it harder to pivot careers or take time off for personal reasons. Avoid overcommitting to debt or expenses that lock you into a particular lifestyle. Keep your financial commitments flexible so that if an opportunity arises, whether it's a new job, a relocation, or an investment, you have the freedom to pursue it. Life can throw unexpected curveballs, whether it's a health issue, economic downturn, or personal crisis. Building an emergency fund and staying adaptable in your financial planning ensures that you're prepared for whatever comes your way. Ensure you have at least 3 to 6 months of living expenses saved in an emergency fund. This will give you the financial cushion to handle any unexpected life events without derailing your long-term financial goals. Adaptability is about staying open to change and being ready to pivot when necessary. The world around you is constantly evolving, and those who can adapt to new circumstances, whether in their career, finances, or personal life, are more likely to achieve long-term wealth and financial security. By staying flexible, diversifying your income streams, and being willing to reinvent yourself, you can navigate life's uncertainties and capitalize on new opportunities.